Hey guys, John Lamattery here, and I wanted to talk with you about the mortgage forbearance program that came down through the CARES Act. I've got my notes here to make sure I kind of go through everything, so I hope you don't mind. We're up in Ottawa. It's beautiful out here. We're sheltering in place at my mother's vacation second home. And it's just our family, so that you all know that in case you're wondering. But in any case, I've saw a lot of stuff online, misinformation, and there's a lot of confusion about should you pay your mortgage or not. A lot of my clients have come to me and it started asking me, hey John, should I make that mortgage payment? And my answer is obviously, hey look, if you have been affected by COVID-19, such as your wife is losing her job or has lost her job, or you have a family member that's ill, or you have to stay home with the kids, whatever that is, then yeah, you should consider utilizing the forbearance option. But there's a lot of confusion as to what exactly is covered into that. And what you have to understand, there's basically two different types of mortgages out there. Make it real simple. There's federally backed and owned mortgages, and there's private loans. So you first have to determine if your loan is owned by the feds or backed by Fannie Mae, Freddie Mac, if it's a VA loan, a HUD loan, a FHA loan, or if it's a private loan, such as a lot of jumbo loans are. Now, when researching this, I came upon, and I'm going to read my notes here again, the Consumer Financial Protection Bureau's website, and they finally put something out that is really excellent. And I'm going to let that roll here with the video that they put out, and then I'm going to fill in some more details at the end of this.
If you are experiencing difficulty making on-time mortgage payments due to the national coronavirus emergency, forbearance may be an option for you. Forbearance can help consumers get back on their feet during short-term financial difficulty. But there are a few things you need to know and some important decisions you'll need to make. Forbearance is when your mortgage servicer, that's the company that sends your mortgage statement and manages your loan, or lender, allows you to pause or reduce your payments for a limited period of time. Forbearance does not erase what you owe. You will have to repay any missed or reduced payments in the future. So, if you are able to keep up with your payments, keep making them. The types of forbearance available vary by loan type. If your mortgage is backed by the federal government, this includes FHA, VA, USDA, Fannie Mae, and Freddie Mac loans. Provisions of the recently enacted CARES Act allow you to temporarily suspend payments if you are experiencing financial difficulty due to the impact of the coronavirus on your finances. Loan servicers may also have forbearance or deferment options for non-government backed or private loans, but the exact options available to you may differ. Here's how this works for federally backed mortgages under the CARES Act. If you are experiencing financial hardship due to the coronavirus pandemic, you have a right to request forbearance for up to 180 days. You also have the right to request an extension for up to an additional 180 days. But you must contact your loan servicer to request this forbearance. There won't be any additional fees, penalties, or interest added to your account, but your regular interest will still accrue. Other than telling your servicer that you have a pandemic-related financial hardship, you won't need to submit additional documentation to qualify for this forbearance. It's important to find out what options are available to you. The best place to find that information is from your loan servicer. Look for their contact info on your monthly mortgage statement. Right now, most financial institutions, including mortgage servicers, are experiencing high call volumes, so there may be long wait times to talk to someone on the phone. Regardless of the type of mortgage you have or how you communicate with your servicer, here are some things to consider. If you cannot make your mortgage payments and you are looking to suspend or reduce your payments, you will need to work with your servicer. If you decide to move forward with a forbearance plan, ask your servicer how you will be required to pay back the amount owed after the forbearance period. Will you owe the entire unpaid amount in a lump sum once the pause period has ended, or at the end of the loan term? Can the loan term be extended so that missed payments are added to the end of your mortgage? Will your subsequent monthly payments be higher for a period of time to make up the deferred amount? Finally, Be on the lookout for scams and scammers looking to take advantage of consumers affected by coronavirus. You might receive fraudulent calls, emails, text messages, or other offers to help you reduce or stop your mortgage payments. Make sure you are working directly with your mortgage servicer. For more in-depth information, including information on how to find a HUD-approved housing counselor.
So as you can see, that's pretty in-depth as far as if you have a federally backed loan. One of the questions that I have that it doesn't really answer, and I don't think that they put that because they kind of rushed this bill, they didn't put the verbiage in this bill as to how do you pay this back. And so it's really important for you to talk with the servicer, whether that's a federally backed servicer or loan, or if it's a private loan. Just say, hey, are we doing a monthly payment plan after this? Are you going to require me to pay this all, on month 13 if I take a whole year of forbearance, or are you going to tack it into the back end of my loan? It's a 30-year loan, and after 30 years I owe the extra 6 months to a year in interest, or if I refinance it gets paid off, or if I end up selling the house within that time frame it gets paid off, whatever it is. They don't really answer that very well, so definitely ask your individual bank as to what the requirements will be, and maybe they have different options you can pick from. So the other thing that it doesn't really note is about how they report to credit. So if it's under the CARES Act, if it's federally backed, they have to report that during that forbearance period that your loan is current. They can't report that you're missing payments, so that's really a good thing, but you want to monitor that. So definitely utilize a credit reporting service every couple of months if you go through this to see how are they reporting that, so that you can go back and make sure you're monitoring your credit score and have them fix that. Under the private loans, it's a little bit different because there's really no guidelines. I know that California state's come down with some guidelines, and maybe your state has too, but there's really no uniform guidelines. So you need to check with, let's say Bank of America owns this loan. Check with them to see, I wrote some different notes here down. How are they going to structure the payback the same as the federally backed loan? How are they going to report to the credit bureaus? I wouldn't be surprised if they actually report credit lates to the bureaus. That's typically what they did during the short sale and foreclosure crisis. So you want to discuss that with them before pulling the trigger on a forbearance with them. You're going to want to ask them if there's any extra penalties and interest tacked to the loan. And you need to also ask them, do you have to prove hardship in some way? Do you need to show a termination letter from your employer or whatever that is in order to qualify for this? To find out, I got written here, to find out if your loan is Fannie or Freddie owned, you can go to makinghomeaffordable.gov or call your servicer, and you can find out whether or not Fannie or Freddie owns your loan. And they are your servicer is obligated to tell you who actually owns the note. So don't worry about making that call. Have patience with these guys. They're going through the same thing that we're going through. They're all human as well on the other end of that line. They might have family members that are sick. They might have lost employment in their house, or whatever, for whatever reason. They are also bogged down right now. We know everyone's calling them. So definitely have some patience with them. And finally, make sure that you're careful for scam artists. We don't want to see anyone getting scammed during this, but we know that people will come out and try to scam during this. They did that during the recession. They're going to do that today. Rule of thumb is this: if somebody calls you and asks for money in any level, shape, or form, such as, hey, if you don't make you don't need to make your mortgage payment now because we'll collect that. We're charging for this service, and then we'll arrange a modification or the forbearance with your lender. They're probably full of crap, so watch out for that, and definitely go straight to your servicer. If you have any questions, you're welcome to call me. I can give you some basic advice. This isn't legal advice, it's not mortgage advice, disclaimer here, but definitely go straight to the bank and try to talk with them direct, and have patience. Everyone stay healthy, and thank you for your time.